Back with First Trades, right here on 18 Let me now welcome on board Brijendra Pratap Singh, the CMD at NALCO, and talk about how their quarterly performance has been. Mr. Singh, great to have you today on 18 Let's firstly begin with, your best ever operational performance across segments. Tell me, what were the triggers behind that, and will the growth momentum continue in FY27?
As far as our performance of 25-26 is concerned, we have done best ever production performance in almost all areas, right from bauxite excavation to hydrate production to calcined alumina to metal production. That is the best ever production we have done. And also sales figure, also best ever sales figures we have achieved this year, around more than 14 lakh tons of alumina we have sold. And metal also sold, we have around 4.74 lakh tons of metal sold. So that was the best ever record performance due to increase in volumes. That was the major achievement which we achieved last year. Our volumes have increased considerably, and we have improved on our efficiencies, that is techno-economic parameters also. If we see the outlook for 27 also, we are targeting whatever we have achieved this year. More than that, we are targeting like alumina production. We are targeting around 25 lakhs, around 2 lakhs we will be getting from our expanded refineries. And metal production also we are targeting more than last year, around 2 to 3% more than last year. So that is the kind of target we are setting for this year.
Okay. Mr. Singh, you've spoken about your production levels, but given everything that's happening on the geopolitical front, where do you see alumina as well as aluminium prices headed for the rest of this calendar year?
Yes, of course. As far as the geopolitical situation is concerned, especially in the Middle East, alumina earlier, before that geopolitical situation, also the alumina prices were under pressure because of excess of alumina in the market. The Indonesian refineries have come up, and that led to the pressure on the alumina. And after that geopolitical situation, smelters have curtailed their production in Middle East, especially Bahrain, Abu Dhabi, and Qatar. These three smelters have curtailed their production, and almost 0.7 to 0.8 million ton production of aluminium has gone down. So it means around 1.5 to 1.8 million tons of alumina consumption will go down there. So that has again put more pressure on the alumina prices. Looking forward, we are thinking that this year we will be getting the alumina prices of around maybe $300 to $310.
Right. And do you expect Middle East smelter disruptions to continue through FY27? Is that what you've priced in?
As far as smelters are concerned, these smelters, whichever smelters have been affected by the war, smelter production, once it is curtailed, it takes time to recover the production. It will take at least 7 to 8 months to recover the production from the smelters and come to the full rated capacity of these smelters. So this financial year, at least 8 to 9 months, the similar kind of situation will exist.
Okay, and Mr. Singh, are your customers seeking shorter duration contracts given the volatile pricing that's at play right now?
As far as our alumina tenders are concerned, alumina, we do spot tenders, and spot tenders we are doing. If we are going for the long term, we are getting less percentage of LME. Earlier, if we compare with the LME, our percentage which we used to get was around 15 to 17% of the LME. Now we are getting around 10%. So it is better for us and for customers also to go for spot tender prices as far as alumina is concerned.
Right. And at what aluminum price level does NALCO maintain its current profitability comfortably?
Our aluminum prices are directly related with the LME prices. LME now it is around 30, in between 35 to 3600 we are getting. So we are maintaining the LME, whatever LME ups and downs are there, accordingly we are increasing or decreasing our prices.
Okay, and Mr. Singh, you have some expansion lined up for you this year. How will the aluminum smelter expansion be funded? Will it be done internally via accruals, or is it going to be via debt or a combination of both?
You see, our expansions, our first expansion target is our refinery. That is fifth stream refinery, our alumina production, alumina 1 million ton refinery we are expanding. Our existing capacity is 2.1 million ton, which will go to 3.1 million ton. June we will be starting the commissioning process. and it will take 3 to 4 months to complete the commissioning. After that, this year we will be targeting around 2 to 3 lakh ton from additional from the refinery, that is calcined alumina production. As far as our smelter is concerned, for smelter we have started making the DPR preparation for 5 lakh tons smelter, that is 0.5 million ton smelter. And our target is this year, maybe September, October, we'll be finalizing the DPR and board approval. After that, starting the tendering process, which will take around 6 to 7 months. And next year, maybe May, June onwards, we will start the groundbreaking. It will take 3 to 3.5 years. So somewhere our roadmap is that 2030 December or maybe 31, mid 31, we'll try to finish off the commissioning of this smelter. Along with that, the power plant will also be coming, that is 1000 megawatt power plant. So both this expansion will require around 30,000 crores of investment. Around 50% will be funded from internal and 50% will be through debt.
And directionally speaking, is FY27 likely to be another record year for you?
Yes, FY27 we are hoping, because whatever targets we have set our target to increase the volumes of production. We will be gaining on the volumes. LME prices, what we got last year, it was around $3,000, around $2,900 to $3,000. Now, this year we are expecting on an average, it may go up to maybe 32 or 31, 32. So some benefit we will be getting from there also. Alumina volume will be increasing 2 lakh from additional refineries. So this will be a better year, and I think we will be breaking all records of previous years also.
Okay, and Mr. Singh, is the company exploring any strategic partnerships when it comes to critical minerals?
Critical mineral, already we have a JV with Kabil. There is a Kabil where we have a JV with HCL, NALCO and MECL, where NALCO is having 40% stake. Where already in Argentina, we have got the mines, 4 mines we have got. Non-invasive exploration is completed. Now we are going for drilling and excavation. After that, the total detailed the deposit will be coming to know, and we'll start after that, take a decision to start the commercial mining. This is for lithium in Argentina. As far as India is concerned, we have a huge deposit of red mud. Red mud also contains critical minerals and rare mudds. In this, we are first going with bark to have an extraction of gallium from our Beers liquid. We are setting up a pilot plant. In this September, we will start the pilot plant. It will take 6 months to run the pilot plant and know the results. After the results are encouraging, we will go for a commercial level plant, and NALCO will be having the exclusive rights for extraction of gallium. Other REs and scandium also, we are having MOUs with IMT Bhubaneswar and NML Jamshedpur, where lab scale test is already completed. We are going for pilot scale test, that is for recovery of scandium, recovery of REs from red mud, and also for fly ash.
Right. And what is NALCO's broader strategy for value-added aluminum products, and what share of aluminum sales can become value-added, say, over the next 3 to 5 years for you?
As far as our existing smelters are concerned, in the existing smelters, we have more of ingot, that is around 50-60% we sell our ingots. As far as value-added products are concerned, around 35 to 40% is value-added. We are trying to increase the value-added by having one more wire rod mill and increasing the production of our rolled product plant. So this is the thing which we are doing in our existing plant. As far as our expansions are concerned, in our expansions, we'll be trying to go to more and more value-added, that is wire rods, billets, and also rolled products, where we'll try to have at least 60% of our product portfolio in a value-added products.
Okay, so that's your outlook on what lies ahead. On that note, Mr. Singh, thank you so much for your time. It was good to be chatting with you.